2 says Swift Supplies is considering the eco-friendly product line, expecting to sell 50,000 units annually at a price of 40 Rand per unit. The estimated variable cost per unit is 25 Rand, and fixed costs for the new product line are 300,000. So there, your information you've been given, how many units you're expected to sell, what you'll be selling them at. So the selling price is 40, the variable cost per unit is 25, and the fixed cost for the new product line are 300,000. Now we get to the question, 2.1, calculate the break-even point in units. Okay, so formula for break-even points, that is your total fixed cost divided by a contribution margin per unit. Okay, and what is our contribution margin per unit? Our contribution margin per unit is our selling price per unit minus our variable cost per unit. So we were given our fixed cost as 300,000. So we input that into our formula, divided by selling minus variable cost per unit, which are 40 and 25 Rand. So that'll be 40 minus 25, which will give you 15. So 300,000 divided by 15, and that will give you 20,000 units. And that's your break-even point in units. Question.
Divine. Divine.
Hello? Guys, please only unmute yourselves if you have a question. Okay, does anyone have a question with the break-even point?
Divine.
Okay. Hello? Okay. Then determine the contribution margin per unit. Like I said, the contribution margin per unit is your selling price per unit minus your variable cost per unit. And we know those amounts to be 40 and 25. So that's 40 minus 25 to give you 15. And that's your contribution per unit. And that's question 2.2 answered. Then for the last question, for question 2, then I'll ask you to discuss how changes in fixed costs might impact the break-even point. Now, there, what you basically need to do is looking at your formula. So your formula for, your formula for break-even.
Sorry, can I please ask a question again? Quickly back
No
to, you bit too fast for me.
Oh, I'm so sorry.
Yeah, you're way too fast. And I think most of the other guys are maybe just like you're too fast. But okay. Question.
Okay, I'll slow it down.
Yeah, just slow it a bit down, because I'm trying to understand you, because I don't know anything of accounting. So you mentioned 2.2, the contribution margin. So
yes.
Contribution margin, so we take the selling price and we minus it by the variables.
Yes, the variable cost per unit.
So which means it's the 40 minus the 25 Rand equals to 15 Rand. That's our answer.
Yes.
Okay, thank you.
Anyone else have a question? Even if it's something we passed already, we can't go back. Okay. So 2.3. 2.3 wants us to discuss how changes in fixed costs might impact the break-even point. Okay, so